What's up, everybody? Good morning. April 4th, 2023. I didn't pull any April Fool's jokes on y'all this year. I should have done like flash sale, 1 penny rocket scooter for 1 second, then say sail over. Something stupid. What's up, y'all? Okay, JOLTS today. 4-day weekend, 4-day week. Good Friday on Friday, so we're gonna have a interesting day. So what I'm looking for is, this is the market that doesn't stop. I mean, the DD 0.98, that's extremely, what's the highest I think I've seen it all year. This market's not coming down, not wanting to come down. So if it comes down for a day, that's great. So I'm looking for that day that we pull back, so the next day we continue to rally. This market wants to squeeze so hard. I'm extremely bullish. How you guys doing? What up? We talk about spreadsheet from the account. Yeah, we'll talk about all that today. Let's get ready to get started. I'll see you guys in just a little bit. What up, everybody? What up, you guys? A little pre-market fumbles here, trying to get everything started. How are y'all doing today? right. Good morning, good morning. Do your chores, hit that like button. That's right. See, you guys are so nice. I love y'all to death. All right. So how to scale. Somebody says, can you chime in on how to scale a funded account with a growing balance? So a lot of times you can't scale depending on the rules. And if the rules don't, if they have a trailing drawdown, then obviously you don't want to scale and maintain your risk. If they don't have a trailing drawdown, then you want to scale your risk to what's appropriate based on account size. And there's an equation that we use to do that. So a lot of them look like they will stop the trailing drawdown like $100 above even. Oh, the stream is buffering. Oh, okay. And yeah, we'll talk about this today in today's Zoom class. If you guys haven't checked out Rocket Scooter yet, all right, I'm getting to type in some stuff here. If you guys haven't been into our Discord yet, check it out. If you guys want to check out the extended trial, $35 for the full access to the platform and our full training program that we're restarting today. Restarting the training program, which is great. We're going to film everything all over again or go through everything all over again, depending. So we will see you guys all there in Zoom. We're going to do Zoom calls right after the trading sesh. How are y'all? Did y'all do anything fun last night or this weekend? How are you guys all doing? Good morning. Good morning. Good morning. Reading all your messages. Good morning, Barb, Brian, Itai, Quest, Ryan, Lee, Lori, Jace. What up, Jace? Daniel, Bill, Michael. Let's go. So market's rational. What do you guys, BLU? What did the bots say? The bot's usually good at picking the monthly hedge pressure and hedge pressure estimate into a decent range. So it looks like we are 41.47 was the high. We were trading at 41.60, 41.42. So it looks like it's a long up, right? You can use the estimate, dynamic hedge pressure range, and then the estimate monthly to kind of say, okay, it's an LU-ish. Okay, so we are, check it out, in the bands today. So rational. VIX is looking clean, nice and good here. This is a pre-market check. Talking about this yesterday. Did the video to go through that. So check, check, check. Now the upper band's been touched. That's great. DD is likely to come in super hot. Again, we had 98 yesterday. If it's 90, whatever, I'm going to look for that dip to get in and trade the upper bands. Let's get ready to get that going here. Get those. Oh, I got to log into Rocket Scooter. Hold on. That's something. Let me log in here. There we go. Run that DD band spot real quick. Okay, let me run this bot really quick. Let's go, let's go, let's go. Is that right? Hold on. So we're looking at $413.90. Oh, sorry. Let's go back to here. Let's go to 4806. So close to huge levels. I know. What's up? Hey, what's up, Theo? Good morning, man. All right, I like what I see. Let's get the DD bands ready, front and center, ready to go for this week. We'll run a monthly map in the morning, kind of see what the month looks out. But I want to see when the JOLT numbers comes out. JOLTS numbers come out. I mean, that's the hang tight, you guys. Don't go anywhere. Cleaning up my charts here a little bit. Okay. It's also going to be a big deal because we've been seeing a little bit of contraction in the economy while job openings have been high. So it's kind of a weird dichotomy you're experiencing. So we're going to see how that pans out. And the JOLTS numbers come out can have a big effect on the market. It's going to be actually a big mover of the market. You wouldn't think so. With the job numbers kind of slowly going up, companies are creating jobs. So you have to see if that trend above 10 million is still there, like active jobs that need to be filled. And there's active people that need jobs that can't get a job. So there's that big standoff between employers and employees. Bad news, good news. Yeah, we want to see something. I want to see some volatility come through. So I'm just gonna wait for Rock Scooter to print out numbers at the open. I'm gonna try to get a trade in that elite trader funding, all the stuff I'm doing here. Still ready to go. Everybody on the space today is talking about looking for that pullback, trying to go long. Can't go wrong with that. You can't go wrong with the 98 DD. I mean, I'm looking at that. That's the monthly maps of some of these stocks are looking non-volatile for like 2 weeks. Meaning this market can just climb. Like, I mean climb without a pullback. That's what I'm like. You gotta trade what is. You can't just say it's been going up, it's been going up. I'm, you know, maybe I got to short it and come down. Don't think like that. Think about what is. Whatever the market gives you, that's what is. You have to trade what is. And what is today, it's pretty good. See that resilience come through pretty soon. 2 minutes, we'll get ready to go. Mark's about to open. Just gonna chime in here and let everybody know we are live on YouTube. Rock's just posted a link if you guys want to watch. All right, let's go. Let's go. Resilience, very strong, very positive. Looking okay. Let me go ahead and refresh and pull this guy up here. My auto scaling was turned off. I was wondering like where the data was. I scrolled way far to the right. Okay. Looking today, we got a BLU on the S&P. That's good. Remember, we have JOLTS number coming in a couple of minutes. So, I mean, it's about 30 minutes, so be careful on that. BLU, long of a hedge pressure, that looks pretty clean. So, SPY is going for a long on that. Make sure resiliences are staying positive. Monthly hedge pressure is so far down at the bottom. Wow, that's looking great. So, we got some numbers coming in. We have a bull long up on SPY, which is pretty nice to see. The DD ratio is coming through. We have 3 different numbers we talk about. The first one is the liquidity map. So liquidity maps are looking strong. 411 support on SPY, looking great. Resiliences are gap fill predictors. So it's 41%, 51% on NASDAQ, respectively. Looking strong. I like those. NASDAQ is in what we call a liquidity pocket, which means it's kind of sitting still. It's not really bullish or bearish. So 320, 321 is a nice tight range on that. A break of 321 would be a nice clean breakout on that. IWM right out the door has flagged the hedge pressure break to the downside, so you got to be very careful today. That is an irrational signal. So if IWM doesn't hold that 178.5 hedge pressure, then we might get some downside move to there. But I think that right now the market's just going to trickle around, waiting for the JOLTS numbers. I really think that's going to be much bigger than people are anticipating because we have this dichotomy going where there are repeat unemployment filings of people that can't get jobs, and the JOLTS have been going up for this year, or actually since late last year. So jobs being created, people can't get the jobs. So it's a big standstill, especially with those manufacturing numbers coming through, showing a general slowdown in the economy. So companies want to hire, people need jobs, economy slowing down. All three of those things disagree with each other. Why do you need jobs if your orders are down and your inventories are down and things like that? So none of the data makes sense right now. So the market's likely going to become more sensitive to the data, and the VIX has kind of been climbing up all morning. So just letting you know what's to come. So be careful today with keep an eye on the Russell, and I'll report in if that resilience number turns negative to show if the S&P is going to fill its gap or not. So what I'm waiting for is just a bounce up a hedge pressure. I might take a long on SPY, just a little scalp, and probably get out of the way of those numbers when they come out. So it might be a quick scalp morning today, but no signs of anything better than that Russell hedge pressure break. So when you break through hedge pressure, markets tend to fall very quickly. So we're gonna look for that, and be very cautious trading around that. So I'm gonna probably trade small because of that bad flag there. Ashton, you looking any stocks today? Let's just take it. Resilience is right on the edge. We might get this. Be careful. The divergence rule might be flagging here, so be careful. SPY is rational, so that's long enough. Let's put one contract on it, hedge pressure. Get an IWM hedge pressure break, so be very careful there. Be very careful if these resilience is going negative here. Yep. So IWM, let's look at this guy. Just be very careful there. That's on daily mode. Okay, we're good. Let's pull the scanner up, illiquidity pocket. Let's see anything that's kind of flagging. Roku's action sign with that Micron. Let's take a look at the Soxel today. I'll see what NVIDIA and some of the other companies are doing. Going back. Ooh. So I'm looking to tap that upper DD band as my trade. I'm going to get a nice little long here. Maybe something small around hedge pressure. When we tap it, I might take a little tiny dip. NVIDIA is here on the edge. Let me take something small right off of that bounce. NVIDIA is right at the edge. So pull that bounce here. So right on the edge at 411. I might want to take a long to the upper DD band. I'm a little early. 411, that's about 3 points up. Trading down through here. Resilience is negative though, so it might tap 411. We'll have to see how this works. Not really. I just got something really small. Nothing too big yet. I'm not ready to long something VIX in the 18s. Yeah, VIX futures sitting on the edge. Just double check this. Just looking at Markets are rational. I'm looking for upper DD band taps with that DD number coming through. It's still 97, still hot. It's sexy. Okay, let's see how this works. With that resilience being, we're going to be careful. IWM straight in on a hedge break here, so be very, very careful on this. On IWM, right? The IWM hedge break is just something to take caution of. If it brings the rest of the market down, then we'll see that. Resilience is at about a 12%, which anything above 10, even irrational, is bull enough to fill the gap to the upside, which is what we're doing right now. If we break through the opening price, there's about a 414 target on the upside of the S&P. Can run about 40 points. I don't know if we'll get there before the JOLTS numbers, but the JOLTS numbers could kick us out. So I'm looking for, I have a stop loss, just gonna be right below about a point below 411. We obviously stay about 410 with DD coming at 96%. That's massive. Again, yesterday was, like you said, 98, right? So that's very bullish. This market's still waking up in the bull zone. It's got no incentive to do anything other than these catalysts bringing us down. So if we do destroy the day on the JOLTS number, it's great. I'd like to scoop up with a bigger long for tomorrow. But this power is here. It's like, I know, reading a lot of people thinking, you know, fade the market, but you know, the mechanics of what drive the market, which is what Rocket Scooter exploits, is clear as day. It just shows that there are sold calls in the money and people are forced along here to hedge it. It's drawing people in, even against their will, because they have to be long the market if these calls get exercised. So I don't think we're gonna see a sell-off anytime soon. I think the market still has to accumulate, has to go through this accumulation phase where people are buying up here. So 411 is hedge pressure on SPY. So I'm trading S&P futures. Resilience is bouncing around, and DD is strong. It's all long and strong. All signs are good. Russell's the only thing that's cluing me into being cautious, but even Russell is trying to hold that dip it just had. So JOLTS numbers come out. We're going to see a little bit of a move. If Rocket Scooter flags as a catalyst, I'll probably close the position out. But I think 410 does support on SPY, and the whole entire stock market, you know, is probably going to move together. I don't think there's anything that's going to deviate today. There's not a lot of indication in our index divergence indicator that shows that the markets are moving in different directions. Everything's kind of moving the same direction. So it's basically all going to be up or all going to be down. And I think that event in about 20 minutes is going to be what tells the tale. So we'll see that. I think like also when I look at on our scanner, we have something called illiquidity pockets. Looking for runners. So are things that are moving quickly in an illiquid phase. So we got Micron popped up on that. LUMN's on there. A lot of interesting ones are popping up. AA is on there. So it's kind of a mixed bag, which just shows that it's the entire market is kind of it's not really a sector that's moving. It's just the whole market. So it's all going to go up or all going to come down. But keep an eye on resilience today, you guys, because I think that's going to be the thing that's the telltale sign of markets moving down or up, because it's kind of slightly just above zero. Yeah, just one S&P futures contract, something really small, and QQQ and S&P are dropping down now again to hedge pressure. This is going to be like my second entry. I'm just going to add a position right here. So just, but small, like in case the market does sell off, I don't lose a lot, but enough to continue to move higher, because there's about a 4-to-1 risk reward to risk ratio right now. Upper DD band's close to 414, and you know, lower resistance is 410. So I'll stop right below 410 if I'm wrong. Okay, we got possible hedge breaks. Be very careful today. Let me add one more around the edge here. Oh, there's a. Okay, let's see. Be very careful on these hedge breaks here. So this could be that thing that I was talking about this morning. I'm going to add one more right here, just around the edge, and see what we get. So we got to be very careful. That resilience is very negative, though, so this might be a squeeze out. I'm going to give it about 2 or 3 minutes to see if it does hold on that, but if not, then that's an out, which is okay. If this is that down day I'm looking for, and that's the down day I'm looking for. Oh, Matt B's talking about playing Halo. That's funny. We were playing Halo yesterday with an overexcited random person that joined our team just randomly. It was a uber hyper 13-year-old. I'm like, was that like what I sounded like when I was 13? And I was like, oh my god, I just finished up a work day. So all hedges, right? All hedges are alerting. My stop is always 1 strike below hedge pressure. So be very careful here. Yep, you're right. So this is it. Now, weird thing is that DD could support right here and hold that, but gotta be careful. So what I was thinking is, we got that hedge pressure break today, and the market just crashes out today and rallies tomorrow. It's fine. So I'm gonna trade just really small on this. This is something I might want to cut on though and get out. But we'll see. Let's get that resilience popping right back up to strong. I like that. Ooh. So anytime you have a hedge pressure break, markets become overpowered by just selling. You know, it's just pre-jolt selling. It can create a delta squeeze. The markets can be pretty quick. So what I want to see is this resilience number get back to positive. Let me squeeze this up a little bit bigger. I can kind of see this. I know, might get squeezed here. So we'll see. My stop is right about 310. So I just have a small-ish position. Nothing too crazy. If this is the down day, then this is the down day. So we'll have to see how that works. honestly think all eyes right now are just waiting for those JOLTS numbers. I mean, what the market needs a reason to come down, and any good news is bad news is good news sometimes in this market, in this environment. So when that report gets thrown out in about 14 minutes, I think it's going to create the volatility needed for the market to do something. I think anything going on right now, I don't trust that there's any evidence or anything to need to be moving. So that's going to be the big mover. But if today's that big down day, it'll be a pretty nasty down day. If we're breaking all hedge pressures right out the door, it could sell pretty hard. You know, the S&P could drop about 30, 40 points. But that being said, you just have to kind of be cautious. And like I said, I have a very small starter position. And I personally am not trying to fade this, but if this is that down day, it's not going to change my sentiment. If this is the down day that pulls the market back, tomorrow is going to be that green day that everybody's been waiting for, because you still got a lot of calls in the money. That DD number, these are most powerful of the big three, which are three entry level and entry indicators that look for positional risk and positional bias. And DD being strong and long, 97, it just means there are stocks that have pushed so far in the money. The market's chasing them because they have to acquire it. These sold calls that are now in the money. So if you sold a call, right, and it's in the money, you have to have the shares to be able to facilitate the trade if you're exercised on, and that's what we're seeing. Just call sellers being squeezed so hard, and 97% of the market cap is in the bull zone. Can't really argue with that on a sentiment basis. So it'll take weeks for this market to reverse, even if it does reverse, even if the news is the most bearish news there is, because you just have to have those options decay out and those positions basically not have any risk anymore. What's up, Ashton? All right, so risky here, very risky here. I'm not taking anything. Two's not a lot, so I'm not taking a big position. Hedge break is only considered broken, 100% broken at one strike distance below. So while these are flagging red, it's indicating that I need to be careful and pay attention to what's going on. Being on the long side from here isn't the best thing. I wanted a really sharp push off of that. Resilience being negative might not be the trade I want. Resistance off of the redistribution zone is what we see whenever we do get a trade that goes against us. Now, the break of hedge pressure potential, it's about when markets are rational, it's on the SPY, it's about 11% chance that we do see breaks. And if you guys haven't checked out Rocket Scooter yet, we have a Discord. Let me post this down in the chat. Feel free to check this out. Come over and see what our community is all about. I'm about to get our 5,000th Discord member. We've been growing so fast. You guys are welcome to join the party. We have the full access to our platform. It's $199 a month, but we're doing this massive special to make it $35 a month so that everybody can check out at least what we're doing for 3 months. So $35 a month for a full platform. All your data feeds are included in that. Access to all the tools, all the training, my Discord, Ashton's community, everything for $35. You cannot beat that. So check out that extended trial. It's about to go away, and not everybody, if you didn't get in, just be an hour forever, hold your peace. Okay, yeah, IWM, just be very careful. Q's starting to hold there, so let's pull up. Let's see what's going on with like. See the XLC looks like. XLK. BLD. Let's pull up a liquidity map on BLD. Just you guys remind yourself. You got hedge pressure pushes from one side to the other. So that's a pretty big... where is that? Oh, it's way down there. Wow. XLK. That's pretty crazy. It's really far away. I mean, it's bull setup, right? Or bull structure for the month, but hedge pressure being way down there. That's crazy. You expect weekly hedge pressure not be so far away. Okay. QQQ, making sure QQQs are looking cool. Now remember, SPY always pulls the Qs, not the other way around. If there's a divergence, you'll see a flag here. JOLTS coming out in 9 minutes, so we're gonna see if my trade hangs in there. Like I said, DD is long and strong. Resilience is weak-ish. And we have this kind of middle reversion setup. Liquidity pockets are random, so be very careful of the random. There's not a big bull push on QQQ. And IWM is slightly weak as well today with the hedge pressure break. So BSU has a very nasty look to it. BSUs tend to have, it's not a short signal, but you tend to have support from monthly hedge pressure to weekly hedge pressure. So yellow to blue is a support, and that's a pretty nasty fall if that does happen. So keep your eyeballs on the Russell today. Lowest call on the zone also acts as support if DD is bullish, and the 97 is very bullish. So today the market can very well collapse and still maintain its bull side from here to here. Russell's not liking the market today. So I don't know if I just want to kind of trim this and when did I get on my second entry? 41.53. Let's see. If you guys don't mind smashing that like button while you're here. We love you guys. Let's pull up some tickers. You guys have anything y'all want to look at? But I don't think the market's going to really make a definitive decision until 9 o'clock when we get those JOLTS numbers coming through. We watch that. If you're reading the news, nothing crazy is coming through. Okay, everything's good there. So with the JOLTS numbers kind of raising post-COVID and then pulling back as everybody, jobs are getting filled and now jobs are available again. There's this big dichotomy of jobs being available. You have unemployment numbers showing that first-time unemployment filings are going up. Not going up, and continual unemployment filings are going up as well. We have the unemployment rate coming out this week and non-farm coming out this week as well. This is the interesting thing, not to put you guys to sleep with some fundamental data, but continuing jobless claims are people that still qualify for benefits, which means these are people that are unemployed and not getting their jobs back. Typically people, as the waves of unemployment, kind of like you had unemployment filings for the first time, or like 4 different humps over the course of these couple years, and this is being flat. It means people are getting fired and then quickly jumping into a job, and with the JOLTS going up, it was available. But now JOLTS are going up again and people aren't getting their jobs back. These are unemployed people still filing for unemployment since about Christmas, right? So it's weird that you have jobs available and people that need jobs that aren't getting them. And that has everything to do, see, jobs are going up, created jobs or jobs that need to be filled. And there's people like, hey, we need a job. Hey, what about us? For some point, as people are getting laid off further and further and further, now you have people that can't get jobs back, whether they don't have the skill set or whether they want too much money. You have a square peg and a square hole and they're not matching up still. Hold on. So looking at all of that, the answer is what's going to happen when those ISM, the manufacturing numbers come through, or the non-manufacturing numbers come through. Because yesterday we had that report, and that report, just going over some of the quickie details from it, is that these are some of the lowest readings we've seen. I think Jaguar was the one who said since April 2020, we haven't seen a lot of these numbers that low, at least the manufacturing. Now, the new orders being low is bad. This is the number that scares me. New orders, people buying stuff from manufacturing companies. So nope. It's just a general slowdown if people aren't stockpiling products. Now, you would think the orders would be down if prices are high, but with inflation coming down, this is directly related to supply and demand. This is not triggered because inflation is high and new orders wouldn't be that low. I understand not wanting to buy a lot of stuff if the price was too high and it's going to hurt your margins, but inflation's been coming down, right? And so the new orders being so low is very scary. So this is a general slowdown. Companies want to hire people, economy's slowing down. People that are laid off need jobs. Companies want to hire those people, but they're not getting hired. And now, as a result or a cause, which one is this? And that's the whole point, is what's causing what. And so generally, all these data points are disagreeing with each other. So it's not really the easiest thing to understand in the market. So what I personally believe is that the people that can't get jobs just want too much money for their job. They got a big salary during COVID. They got laid off because the company didn't need them. They're probably just showing up to a Zoom call once a week, which I'm sure that's a lot of you guys, which is cool. But then at some point, the company's like, we need to trim the fat. We don't need this person yet. And the person's like, well, hey, I just bought a house, man, for 50% over market value. I need a job. I need a higher salary because of inflation. They're like, no, well, there was inflation, not anymore. Oh, you normally got 150 and you want 250. They paid you 250 post COVID and you want 250 now. No thanks. We need somebody that'll come in at 150. And the guy's like, no, I want 250. And so that's probably the standstill. You have people that want a high wage and a company that don't want to pay a high wage anymore. And And I think that's the dichotomy there. If I were to take a, if I can think so. So, what's the reason we monitor IWM and not Dow's ETF? Oh, well, simply put, the Dow itself is just not representative enough of money flow into the stock market. So you need a lot of data points to get a really robust measurement. So IWM being 2,000 stocks and S&P being, 505 tickers or 500 companies, you're going to see that represents a diversified, large basket that has everything. And Dow just being, kind of spot picking healthy companies from every sector, it doesn't fully represent money flow into the index. You can sometimes see, if all the stocks are tethered together, Dow kind of is just a repeat of the S&P. So the Dow Jones in this era is just not a useful index, in my opinion. So I just don't utilize it. The Russell and the SPY, or the Russell and the S&P are the two most important indices. NASDAQ really isn't that important either. It just becomes important because tech has commanded the top 10 spots for a while. I much remember the days when you didn't even care about the NASDAQ because oil companies and bank companies are the top companies in the world. So let me do this. I got to put up these DD bands on Qs just so I can make sure I have them. So just Dow, it doesn't have enough juice in it. It's like an appetizer, right? You want to see what the full steak looks like. And Dow's really much going to just reflect the S&P. If you look at the correlation tables, like the MRCI table, you can see that they very much correlate with each other. Sorry about that. I was talking on space. Briefly state what AJ said, if you don't mind. Which ticker are you talking about? On SPY itself. So every single day the options landscape changes, right? So throughout the day there's trading. So when we get the data from Opera, we do our calculations on the new landscape. And when hedge pressure is a balance of weekly options and monthly hedge pressure is a balance of monthly options. When the start of a trading month, which is the 4th Monday of a month, you typically, all things being equal, that's when monthly hedge pressure is supposedly the farthest away because it's the highest variable, right? You have a whole month ahead of you and you don't know how the month's going to end up. The closer you get to expiration, monthly hedge pressure tends to decay towards price a little bit, just as the Greeks change. And so what you'll notice, it being so low and us being so high above it, even this far into the month, or about halfway through the trading month, the way that we define a trading month, it's actually just showing how lodged up in this bull zone we are. We move too far, too fast against expectations of all of this kind of bear sentiment that's been here. The market just squeezed so high, and being really far above hedge pressure monthly just means that it's a really strong bull month. And it also means you can fall to that level today or in the next couple of days, because it shifts around a little bit. It doesn't shift around drastically. Here we go, JOLTS are out. But it does mean that, in general, we're just stuck in a bull market, and it can fall really far and still have bullish structure. So it means there's a lot of calls squeezing the money. There's a lot of puts being pushed out of the money, just like you said. Yeah. The JOLTS numbers came through. Sorry. Yeah. But yeah, you're 100% right. Let's take a look at what we got. Let me pull this. Let me go really quick. Yeah, and my longs are still going off here. Where's my... So those are the factory orders that came through, actually. 9 o'clock. Refresh my little thing here. Resilience is pushed positive. That's great. It's good to see that. Actually, it was the factory orders minus 0.7 against minus 0.5. So those factory orders are a miss, just like I thought. I don't know if bad news is good news. I do like this nice little pop I'm seeing, though. I am probably going to... Yeah, we're pushing higher. My longs are playing out, so that's pretty good. Normally don't hold near a catalyst. I like this little bit of a bump. I'm just gonna take some profit. That's 650 profit I took on that. I'm just gonna kind of trim that a little bit. Yeah, I mean, I'm gonna take it. We're gonna push the upper DD band. I'm gonna trim and hold a runner. Yeah, I like it. Okay, cool. my 100K challenge account. Yeah, it's up about 2 grand right now. Let me just trim a little bit. I don't like trading into catalysts, but I was very confident with those high DD numbers. I'm gonna leave a small runner on the table in that. Okay, cool. Yes, I'm doing a 10K to 100K live challenge, fully transparent. If you guys want to watch live trading, probably notorious for being fully transparent. I show my stats, my win rate, my loss rate, the whole thing. You actually analyze everything I do. So if you guys check out the stream, one of the current challenges I'm doing is taking a 10K account to 100K. I love doing challenges like this. I'm only trading S&P and NASDAQ futures, so no gimmicks. You know, there's no, trading the strongest, most liquid things against the most powerful algos in the world. So we'll see if I can do it. Come in and tune in. This is the stats account I'm talking about. I trimmed down some of my position, locked some of that in. Yeah, so that looks good. I still like the data, but I mean, like I said, that we've jolted up a little bit. Let me see if those are the factor orders. Where are the jolts numbers? Oh, here we go. Ooh, okay, so this is it. This is all right. You know what? This is the bad news that I was thinking about. We have this dichotomy going on right now where jolts have been going up for a while, at least since August of last year. So jolts are the available job openings that that need to be filled, and we've seen waves of unemployment. First time unemployment filings were coming out, and you see that over the last year there's been about 4 waves of unemployment. That this time around there aren't any new layoffs really, and you see that reflect in the first time unemployment filings. People tend to go file like that week or that day, and those folks are having a hard time right now getting jobs back. And all first 3 waves, it was like within a week or 2, you can see in the data people are going back to work. But now for the last, I don't know, 4 months, there's just a kind of a stagnant pool of available workers that can't get a jobs when jolts were going up. So it's like companies want to hire and people are like, hey, we need jobs, and why aren't they getting filled? And so with the jolts continuously going higher and higher and higher, I fully closed all my positions, by the way. That's a terrible number. With this, it's now below 10. So it's interesting to see that companies are actually like, okay, we don't need people anymore. And it probably matches those factory orders and all that stuff that have been shown to come down. So companies are now actually starting to see that slow down and are like, you know what, maybe we don't need these jobs after all. We don't need to hire these people. So that's going to reflect in the economy. Obviously, people that are laid off, they're not out there spending money. They're not out there putting money in their 401k. So that's less liquid in the stock market. That's less buying of goods and services. So obviously that's just generalized slowdown in the economy. And of course, with credit tightening right now, they have a hard time. Those folks have a hard time living on credit. So obviously that's a strain, and it just shows a slowing down. It's not really a catastrophic, but it's the first time we've seen it below 10 since COVID. That's correct. It hasn't been below 10 in 3 years. So that's a really interesting metric for slowdown. Now, it doesn't mean I'm bearish the market, but it does show that this could be perceived as a bear day. So I just gonna take my profit, get out of the way, and let the market just kind of do something with this. If it does sell off today, I think the squeeze is still powerful enough to overcome this, but it is a sign of that generalized slowing down. It is a sign of what the numbers we'll see tomorrow with those non-manufacturing numbers come through. The manufacturing sector just looks terrible. And it was just, Jaguars here, you can talk all about it, but those numbers are horrible yesterday, weren't they? Horrible. Oh my God. Okay, I'm just gonna take profit, whatever. Whatever. Again, I'm hoping that we get, okay, IWM is back below hedge pressure. I just took profit, that's why. So I didn't get it. I got a big bump and I just closed out because honestly, it just, hopefully this will be that big sell-off day that we get. And I'm just not going to take the long, like I said, I'm not going to argue with the free $650, but we are in a recession, Waylon, 100% with you. The point is not bull market, right? We always trade what is. And if you remember, if you go back to my Twitter, all my bookmarks, I'll have this. So when the market bottomed last summer, like it was like July to August, we isolated a 2-month bear market rally in that. And then of course in October, like 3 days before the market bottomed, I actually called a bottom then. I don't call bottoms or reversals ever. And when I do, it's big. I mean, that tweet went viral. It's like 20, 30,000 impressions. People are like, Matt's calling it bottom. Holy shit. You're going to be wrong. You're going to be wrong. And the market's been bottomed ever since then, right? So it doesn't mean that it's bullish. I agree with you 100%, Waylon. We're headed for a worse recession. The problem is mechanically, the stock market is not designed to come down. What's happening right now is everybody did take that bet. See, you're correct, right? It's the obvious bet. We're in a recession. We all know it. This right here will tell you everything. The market tends to punish latecomers to the trade, and that's what we're staring at, right? Yeah, eventually this market, it's very bearish, but it's not bearish enough to overcome this mechanic. And that's what we've been staring at. And that's why this market is still stuck up here. And even since October, right, I've just been throwing longs at it for the most part. And it doesn't mean if the market's going to plunge and crash on itself, we need to go through at least summertime. We got to see QT full. As you say, the bond market is showing that. Obviously, the petrodollar could have a little bit of accounting, to that. But in reality, it's just the Fed needed to raise rates higher to save the bond market. I believe we need to go at least to 10. But the Fed committing to cutting rates right now, which is exactly what you see if you look at all the votes of all the members. The majority of the members think at worst case scenario, only one person thought we go to 5.5, which means 50 basis points raise. At the 25 they've been doing is only 2 more rate hikes. That's only one person that thinks that. There's one person that thinks we get 1 more rate hike at 25. Everyone else thinks the median rate stays below 5 by the end of the year and lower. So by the votes, they believe appropriate monetary policy conditions now is to cut rates by the end of the year. So as some people are stating, they're going to go flat to the end of the year. If you look at the actual votes, they can actually cut rates. And if they're doing that to save the banking market, Wall Street's not going to care about fundamentals. Wall Street is completely stupid. You're smart, Waylon. Wall Street's a bunch of idiots. They are. They're dumb. And this is that short squeeze potential post-COVID. What's neat to see about what happened in the market, the obvious trade is to short a bear market. But what they do is they punish you for holding on to it. And if you can't hang on, you get squeezed. And that's really what happened. And the TFF report and the Commitment of Traders gives us a whole lot of neat information about this. Where's my... So we're kind of stuck in a forced short squeeze before the market comes down. Where's the TFF data? Come on. Okay, well, that's not there. So I agree with you. But it's about timing, right? So trading is not about picking the right side. It's about timing your trades. And that's where we are right now. Carrie, still new low of the day. What's the reason we monitor IWM and not Dow's? Are we talking about that? Robbie, what's up? They want those big stock options. Yeah, they gotta squeeze those folks. I don't know where my report is gone. Hold on. There it is. Okay. So this is one of the things that we're dealing with right now. If you look like post-COVID and the squeeze, you see about right here where my mouse is. This is the asset manager's net long positions in the TFF report, which is down here at the bottom. This takes all open futures positions by reportable entities. Typically these are like hedge funds. These are like, smaller commodity pools and annuities groups. And these are like these are your market makers. And these are pretty much your long only institutions. These are your 401ks, mutual funds, places like that. You can see that the green line maintaining a net position of all reportables started coming down, right? People were selling on the news of QT and rate hikes as early as July of 2021, yet the market still rallied 500 points before it came down. It's about timing, right? So the idea is that as a trader, it does come down, but you can't just be like it's coming down. You know it's going to eventually come down, but the data can squeeze out all those shorts, which is this blue line, right? Everybody shorted that COVID would be shut down the world again a second time. We all saw that, right? I can't believe that the data's... I'm not losing that data. Okay, I guess I can't they're having, oh, there we go, scroll back. So people started shorting the market. The blue line is basically your net contrarian part of the short. So after the market collapsed during COVID, and you see how this blue line started, people were like, oh, it's a global pandemic, so let's just keep shorting and shorting and shorting and shorting. As the market rallied, people were betting on the new president potentially shutting down the market again, right? Or sorry, shutting down the globe again. Now, Trump did, and the question was, will Biden do it? And people are betting that he would, because the Democrats were the ones that pressed for it the first time. Turns out we had a vaccine come through, and that didn't happen. So that short position that's well below zero, minus 450,000, that's massive short. They're short against the banks, who are the ones that are long against them. They're actually holding a net long position. What you notice is that when the market makers are long the market, because everyone's shorting against them, they punish the shorts before the market starts to come down. That's exactly what you see happening right now. People are shorting an obvious bear thing, and the dealers have to hold the bag. The banks hold the bag. They don't devalue themselves. Never in the history of this report, this is the trick, has this red line been net positive and the market's crashed. It only happened like 8 times, and every single time this red line had to be negative for the market to find lower lows. So how long does it stay positive? Well, we've seen historically, even back in COVID, 6 months. The dealers are positive for 6 whole months. And, you know, pandemic and blah, 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 and nothing happened, right? It did not sell. And then all of a sudden, the blue line that were short, the shorts are forced to cover because they can't hold on to that short anymore. And they covered and they held and 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 got squeezed a second time. So the two mechanics of the market rallying from here to here, from here to here, and from here to there, simply short squeeze. People are betting, oh, QT's coming out. Oh, everybody, let's hang on. We know QT's coming out. Rate hikes are coming out, but the market's... and so what happens is people get squeezed by shorting, and it just has to do with the timing of that. And that squeeze is actually what pushed the market up higher. It's really, really neat to see that. So right now, does this look familiar, anybody? This is the magic. And we were the first people to bring this to light. And we brought this to light during COVID as well, that this report is easily, you can easily see that same positional distribution. You have asset managers dumping stock and getting out of the way of bad news. That's expected, but they also still buy dips, and every time the market dips, they'll buy. They love to buy as long as you have people employed putting money in 401ks, they'll buy the dip. That's what you see. It's blue line short against the banks. It's hedge fund shorting against the banks, and the banks say, well, we control the market. No way. We're going to go ahead and squeeze you. And it's the same thing. People are selling on that bad news. And I love what you're saying, when I say 100% EPS are heading lower. Multiples are too high. Multiples are way too high. And especially in stocks in the NASDAQ, it's crazy. In tech stocks, a lot of it is just terrible. It's completely overweight for what you'd expect it to be. You're trading way higher than what earnings state, and that is correct. Right, hens will come home to roost. I don't disagree. So it's a matter of when. And in the history of this report, which goes back to 2008, 15 years, the stock market has never collapsed to find lower lows. While this red line is positive and this blue line is negative, not once. This is the same setup post-COVID squeeze. You have longs selling on that bad news. You are correct. You are right. They're just early. It's going to take another year for this market to collapse on itself. The community of traders was out of commission for like 2 months and magically comes back in commission, and the market makers shifted from a negative to a positive position. That's shenanigans if there ever was one. Somebody was behind that blackout to mask that potential accumulation, and look what happened. It rallied ever since that report came out. This is manipulation on Wall Street. That's what Rocket Scooter is known to uncover for you guys. That's what we do. We dig in the real data. We watch these reports in real time. I mean, we're engineers here, right? So in this blackout period, it wasn't that alarming. And then technical difficulties, they couldn't get accurate reporting, and all of a sudden the report comes in 2 months later. Oh, banks, oh, we were short, but now we're long. Oh, look how long we are. They haven't been this long since summer of last year. Isn't that crazy? Magically amassed hundreds of thousands of contracts secretly in the dark. What the fuck, right? So interestingly enough, right here, we're sitting here screaming short squeeze. When that data comes out right here, we're like, oh, this is the biggest short squeeze we're gonna see. So we're pushing, we can go 4,600 on this power. And then the market will do what you're saying it's gonna do. Take years to sell off. It will have to take years to sell off, 100%. Hard to believe earnings or companies will be good. Well, it's a mixed bag, right? I agree the earnings could be bad. But if you think about it, right, there are companies have trimmed the fat and not hiring people back. Their bottom line is gonna look good. And all it's going to matter is the forward guidance. The forward guidance is probably going to be weak, but I think the bottom line is better because, you know, they've trimmed their fat and they're operating leaner now, so the profits might be up. So it's kind of a mixed bag. I don't think earnings are going to be great. I don't think they're going to be good at all, but I don't think they're going to be terrible enough to, again, dethrone the strongest short squeeze that we'll probably see this decade. So the problem is that all the people that shorted the obvious answer are just gonna get bled out of their shorts before the market collapses. It's like there's too much of it's like you're falling out of a parachute, a plane without a parachute, but there's giant gusts of wind like blowing you up while you're falling. It's just the mechanics are what we exploit, which is just so neat to see. I'm as bearish as anyone else. It's just the data is telling me, well, this isn't the time to short this. So the trick is, the market doesn't find lower lows until that red line reports to be lower. And it's actually becoming even higher. And that's the neatest part. And I have 2 videos on this report. And I've used this report. Anytime you see certain patterns in this report, you use it 100% to show what you're seeing. To show what we're seeing now. I can use this report to supersede my fundamental thesis. So like right now, does everybody see this? And I'll show you the history. I actually like to show up the bar chart one. It's just my friends over there, bar chart, but it's not having the historic data. For some reason, it's not printing. So CME Group has one, but you'll see that historically, that red line needs to be negative for the market to come down. It's cool to see that. So this is a massive short squeeze, and it's just going to go up before it comes down. It's gonna go up fast. And ever since this report came out here, a couple of dip days, we're just like hooting and hollering with excitement. We're like, oh man, this market's gonna squeeze so high in earnings. And what's it gonna do now? Even if we get a nice red day, it's still gonna, we're going to 4,600 before the summer. If the Fed's committing to rate cuts, it doesn't mean that we're going to all-time highs. The market is trapped, so we are stuck. Why here? Because monthly maps are showing that volatility and that support. The market has bullish support for months out. It's crazy. It's crazy how trapped the shorts are right now. And they're going to be trapped until they bleed themselves dry. The bank's not going to reward everybody shorting the obvious trade. And that's the same. They love to do that. The banks don't make themselves lose. Matt, you think about 4,600? It's going to take about 3 months to squeeze there. And then from 4,600, the economy is going to be collapsing. People are going to be defaulting on their mortgages. Those people that can't get jobs, if they don't get their jobs and unemployment stay high, liquidity's dried up in the market, QT's fully realized, we're way overpriced on earnings, and all those fundamentals will finally take over. The fundamentals are like the Titanic. You can't steer fast enough to miss the iceberg, but it's there, and eventually we're going to crash into it eventually. I don't know if the stock market's going to crash, but I know the bear market is going to win. 100% there with you guys. In August, dealers are long, but price dropped huge. August here. When I say dropped, I mean crash. The market doesn't crash on its own. We talk about crash. This is what I mean. Let's go back to, it just cycled. It didn't fall, didn't rally, didn't do either. Crashing means like when you're in a bear market or recession, the market consistently finds lower lows and lower lows and lower lows. All we did in August was cycle down in a consolidating period. So right here, I wish I can, let me see if I can't pull up the, maybe the 2-year, I can actually scroll back to it. So an example is what you're saying is here, the market actually stabilized here and all it did was return to bottom. So the whole time the dealers are positive, You see how there's just this magic force that keeps the market from crashing? It looks like it's going to sell off, and all of a sudden this positive... I remember on this dip right here, I think this is CPI day. I remember I bought my JP Morgan calls that like I had like thousands %. I got JP Morgan, Apple, and Google. Everyone remembers my trade. I bought literally this day before, and I doubled down here. The reason was because dealers are positive. There's just a magic plunge protection feeling to the market. It wants to go lower, believe me, because everyone's shorting it lower, but for some reason, the bid gets raised, and that's exactly right. You see that sunshine? It tried to go, I mean, we did go at 36, maybe 200 points lower, and then it rallied from there. It was a massive fake out, and the banks have been squeezing people ever since. And so the neat thing to note is that it's just, think about it. You control the market. You hold the bag. Are you going to devalue the market under your own feet? When people are willingly buying from you, the green line? No, you're going to squeeze the shorts as long as you find buyers. And there are buyers ever since October. The green line is going up, even though it's slightly coming down. Longs are willing to buy the market since October, and the banks hold the bag. They're more ready to facilitate raising the price to squeeze the shorts because people are actually buying at these levels. You see that? So the mechanic is banks don't want to crash the floor under their own feet. They're holding the bag. And so price dropped, but the market didn't crash. It somehow has sustained against all this bad news. This is the mechanics of the manipulation of market makers and stock market. That's exactly how it is. And anytime it's positive, they just, and you have willing buyers, the dealers will squeeze out the shorts. And that's exactly what happened. It happened there. We're just like code breakers here. We naturally find stuff here, right here. Market's trying to sell off during the 2016. It magically found lower lows, just like this last August, right? Last October. And then magically didn't collapse and actually squeezed shorts out over the remainder of, I don't know, Obama's presidency, right? Or actually, this is when Trump came in, I think. So that's the switch from Obama to Trump. And so you can see the blue just gets squeezed and squeezed and squeezed, and the dealers do not crash the market on themselves as long as they're willing buyers. And there were willing buyers all through this time. That green line's been going up ever since. I do have a video on this. If you go to the Rocket Scooter website, or sorry, Discord, I have tons of videos on this. This, at times, is a report you ignore. It doesn't really tell you much all the time. But there's certain times it tells you everything you need to know. And we use it only in times like this, when the bear market, I love those red lights, dude. I'm glad I got out of the way. Put that money in my pocket, not touching the market. Ooh. Ooh. Oh, baby, let's go. So the neat thing is that what you're waiting for, Waylon, is you're waiting for the banks to no longer be positive. That's when everybody's buying the market, and that's when we short, right? That's the best part. It's like timing. They always tend to squeeze out the obvious trader. Yeah, of course, the bear market, short the market. Bleh. Yeah, of course, right? Here as well. Was this was flash crash, wasn't it? Well, that's not the flash crash. When was that? When was that flash crash? Oh no, there's the flash crash right here. Okay, so let's not incorporate the flash crash. But you see how the flash crashed? Dealers went positive again, and that rescued the market. When they hold the bag, they don't collapse it on themselves. People are like, market's gonna spiral to zero. It didn't. Here's this sell-off in 2011. That was the end of QE2 or QE3, I think. And market looks like it's collapsing, and dealers are holding the bag against the short, and there's willing buyers, so they squeeze out the shorts. And actually, no, they didn't. Actually, no, there were genuine buyers. They didn't squeeze out shorts. Shorts actually getting worse. So even the dealers being positive, they only squeeze out shorts for a little bit, and then rapid buyers step in. The rule of thumb is that there's people willing to buy, whether they're closing shorts or entering longs, and dealers hold the bag, they will raise the price every time. And that's just the side with inflation. Stock markets always go up just to inflation alone. Like everything inflates, including stock prices. So the way you analyze this report is really cool. I'm glad you guys like Rocket Scooter and hanging out with us. Okay, there's that support. DD 0.98. We do have hedge pressure break, but this is hella strong. And I don't know if I went along at the 410 again, just to support the bull zone. Micros if I do. I don't know. What do you guys think? God, I trade. I want to trade. Yeah, same thing, man. Like, I'm just like, I got something. Do I want to take the thing is that bull zone support, when you do trade irrational, you have to trade from something to something, right? And so let's do an analysis really quick. When irrational, I don't trade for direction. I trade for scalp. If you put it all together, we're at BSU now. So let's see what where BSU balance is at, right? So we go to liquidity map. BSU, lowest call wall in the zone to the halfway point between hedge pressure and lowest call wall, which is literally here. So if you do the math on what this diagram shows, blue, lowest bull zone support, right? So here's blue, lowest. It's this little leg right here, which is this entire green arrow right there. The green arrow just points from here to here, which is exactly what happened. It's not a big enough, strong enough move for me to want to take it. So I didn't take it. That risk and reward just wasn't there. You know, a 10-point stop for a 5-point move just sounds silly, right? So anytime markets are irrational and I do trade small, right? A fraction. My position, I would trade 2 or 3 micros had I long this here. I would only long from here to here anyway, so it wasn't really a big potential run. DD being 0.97 shows that we are likely to support there really hard right out the door, which is that trade would have been good. And with resilience just kind of hanging it flat, right? I need both of them to be beyond 10 or beyond -10 for me to take action. So even with it sitting here, I mean, S&P was -0.5 and NASDAQ was less than 10. There was not enough oomph for me to want to trade it. So when you're irrational, resilience delays. It no longer loses that leading effect. If you get squeezes on the ETFs themselves, you likely can't use resilience as a leading indication when irrational. That's one of our rules as well. So clearly resilience, the index is moving before the stocks are moving. Clearly with resilience lagging is showing that effect. And so when rational markets are there, resilience is always a leading indicator. That's why I longed out the door. Once we close out that gap, or once we tap that open, that's when I close my positions out, right? So irrational markets, resilience cannot have its leading power. Jello. 5 pandas, killing it. Nice. All right, you guys trade today? Did I buy calls? Jason said no, I long futures. This is a trader funding program that I'm testing out to do alongside my to do alongside my 10K to 100K challenge. So I'm trading futures in both. This was so what I did was I did 3 different trader evals. 2 of them were for $150,000 funded account. One of them's for a $250,000 funded account. So I earned over $500,000 worth of funded trader accounts live on stream this first month. And I'm just trading one of them. I told them just to cancel the first 2. And I just wanted to trade one just to demonstrate it. I don't I'm not gonna trade 3 accounts at once. I'm just gonna trade one. And so this is the one I capped, the 150. Oh, my 10K challenge? Yeah. Here, let me share real quick. Here. That's where it is today. My 10K is close to 25K. So that's up like 150% or whatever that is. So 10K is at, you guys see that? That's where it is right now. So I made a similar trade in my 10K challenge account. Matt B. I have it on my other monitor. Yeah. That challenge I started, I don't remember when I started that challenge, maybe January-ish, like, but I took a break to do the evals. So I think like in April or March, hold on, no, February, sorry. I didn't, I was doing the evals and focusing on those instead of juggling that. So there was a pause for about a month, but about 2 months of trading. Yeah. How long did it take you to get 10K to 100K? That'll take me about 3 months to get to 100K from the start. So if I keep trading at the same pace I'm going now, about 4 to 6 weeks, it'll be at 100K at the same win rate. So I'll make 80K next month on this account if I keep going. If I maintain the same win rate and I leverage the same leverage without over leveraging. Currently right now trading a little bit over 2 or so contracts a day, right? On a risk interval that's about 3,000 up or down, right? And so every 10,000 bucks, that becomes 45, then 6,000. So it compounds that way. If I maintain the risk ratio of net lick divided by full initial margin requirement, sticking to my rules, I'll get there. Oh, thanks, Abraham. I hope so. But what I find to be more challenging, which I like to do, like I don't just get on stream and just trade. I get on stream and I say, this is what I'm going to do, and this is the goal, and I'll get there. It's much easier just to get on stream and trade. But if you tell people, hey, I'm going to earn a $150,000 funding account, you either pass or fail. There's a metric, right? You either get it or you don't. And so people are like, these trader funding programs, you should check it out. You know, tell us about it. See if you can do it. I never did one before. And I don't need the, you know, I don't need to do it. But I was like, let me check it out because they're really hard, right? They're really hard to do. The rules are really hard. The rules are very tight. The risk is really tight. So I did find it challenging. But if you know what you're doing and you know how to balance the risk, you know where I always say where you know where the rim is bent a little bit, you know where to shoot the ball. So with this being said, I know ones with trailing drawdowns. I know what they're trying to do. They're, you know, convince you to give you enough contracts to overtrade, just control your risk, only trade at certain times, don't trade volatile markets. I mean, all these rules on how to do it. I built the rules before I even did it, and I basically, I know this will sound really funny, but I told people, I said, I'm gonna do it, and I'm gonna just pass it all flying colors. And they're like, they're really hard. And I go, well, let me plan it. And I spent maybe like 2 or 3 weeks actually planning it out and trying to create a system on how to do it before I even touched it. And right out the door, I crushed 3 of them back to back. How did I do it? Well, again, my results are unusual, so don't think that you can do that if I did it so easily. But I created something, and I teach a class on this, and I'll teach a class on this today if you guys come to the Discord. We did it yesterday. We're going to redo it again today. I created a program based on my own win rate that I know I can get in this environment to limit what I can do based on Rocket Scooter risk interval rules. And this is the max contract size when I'm allowed to trade. I think it was 24 contracts. And I only traded 3. 2.8. And this prevents blowouts under the worst case scenario of me being in the market on a spontaneous catalyst. So the neat thing about understanding the way the market moves is I can throttle my position and not get squeezed. And I proved it by just crushing 3 of them back to back. That doesn't mean anything. You still have to be a really good trader to pass them, but even really good traders get squeezed because they're not good enough to understand what the rule is that's designed to squeeze them. So the first part of these things is understand what the rule is designed to squeeze you. Each one of them has its own little, you know, loose board in the box, right? What you have to find what it is. And when you isolate it, then your natural trading skills just navigate inside of that box. Do I trade MES on the 10K account? I did when I started. So there's an equation I use that governs my position size. Again, if you guys go to the extended trial at Rocket Scooter, I want you guys to check it out. Come to you can use our platform for 35 bucks a month and join the community and come to like 3 months worth of classes. We normally charge $199 for this, so we want everybody in the world to come through and check it out at least one time. So this is the link. come out. I'll do a class on this in about 20 minutes. Once you let me in, you'll definitely take that class. Did I not let you in yet, Greg? Is that UG Cat? Oh, there you are. I gotta let you in. Let me think. Sorry, I tend to not see Discord that often when I'm trading. I'm horrible at multitasking. Let me get you in there. You can also message Slacks if there you go, I guess you did. So we'll teach a class on these trader funding programs. Now, I wasn't gonna do the funded account, but then everybody's like, well, wait, don't just show you that you can pass the test, show how you can keep the account. That's what they're like, that's what we really struggle with. Like every once in a while, you know, clients are like, every once in a while I pass it and then I trade it. I managed to fuck up the real deal and lose the account. And they go, okay. So I said, what do you guys want me to do? The 10K challenge or the funded account? And everyone's like, you should do both. And I was like, well, I can only put one on the screen. So I put two of them on the screen. Then Rocket Scooter loses all its beautiful real estate. This is the stream's about Rocket Scooter. So like, I'll put one on the stream and we'll focus on that. And I'll just trade my other trades, mirror them on the side. And everybody's like, okay, well, I want to see the trader funding program. I want to see how you keep that account alive and what you do. So since the ETF is a 45-day payout schedule for elite, I'm committed to a couple months of managing this account right here, just to show. So this is the first week I've been trading it while it's in elite status, so it's already up 2K. And so I'm managing it by trading a proper position size, like 2 contracts. I need to build a buffer in this account. So that's the point with that. You got your access, Gregory. Check it out. I think you should have it now. You think the biggest challenge in trading is general is over trading, compulsive trading? I think so. Pyro is 100% right. How do you not overtrade? Well, tend to notice that the biggest moves in the market, like the easiest moves to pinpoint, are the ones that happen the first 2 hours of the day. So I try to get in and get out and be done before lunchtime. And once I make what I call my career trade, the obvious one today, once I make that and I'm done with it, I try not to overtrade further. Any second or third trade I do take is always smaller than the first by a magnitude of like 20-30%. So if I traded 10 contracts on my career trade, my gamble trade would be 2 contracts. My next gamble trade would be like, you know, 3 or 4 micros. Like if I'm continuing to push at the market all day, I take very incremental, or I take very substantial drops in position size. I don't trade 10 contracts and 10 contracts again, then 10 contracts again. That's newbie trading. The market becomes less predictable as the day goes on. So your easiest predictability is the first 2 hours. It's my strongest trade. If I don't identify a strong trade, then I don't identify a strong trade ever. And if I do take a strong trade like I did, I don't come in and hit it again at the next spot with the same size. If I just did 2 and I want to hit it again, I come in with 3 micros buying at this dip. That way I don't give up profit. In a less confident area of the market, I'm not taking bigger risk and never go in heavier second, third trade. So even if you do overtrade, if you step your position down at least 75%, you'll force yourself to 0, right? So if you trade 10 minis and then the next time you only trade 2 minis, the next time you only trade 2 micros, and the next time you only trade, well, you end up fractally below 1 micro and you just don't trade anymore. You push yourself to 0. How's prop go? Hey, what up, Matt? So prop right here on the stream. So Matt, I did 2 150K eval static for ETF, and I did 1 250K end of day drawdown and passed all 3 of them. So I got $550,000 funded accounts. And I'm only keeping and trading 1 of them. I know with ETF you can multi-trade and all that stuff. I'm gonna just do 1 and focus on 1. So I took one of the static 150s. I just wanted to pass it twice just to make sure the video I'm gonna make wasn't a fluke. Right, I want to double test my strategy. I think static eval is the easiest one to pass and the easiest one to get ahead on, the easiest one to maintain. So I asked him, can I redo the eval? junk the elite accounts. I want to redo the eval and do it one more time. Everyone looks at me weird when I ask that, and I'm like, oh, they're like, wait, you want to do it all over again? Yeah, I just want to do it all over again. You're like, why do you want to do that? Rather than forming an account. Oh, I want to pass the test again. I'm only doing it for the challenge. So that's the integrity, right, that we have here. I want to make sure if I teach a video on this, I can just pass it on a fluke, right? So 2 of the accounts I told them I didn't want to use. And one, I just said I just want to use, because you can sign up for at least 20 accounts with ETFs, which I like about it. It lets you sign up for 20 accounts. You can do 20 at once. That's crazy. And so I'm like, I just want to redo it. And then I redid it. And then I was like, okay, what I did wasn't a fluke. And I made a video on how I did it. Now I'm going to make a video on how to do this static elite account and keep it funded. Keep the funding account without busting. Did you do the static one? Oh, nice. Matt's, it's just because it's fun. Yeah, like I went out, I'm just like you guys, like a customer. I just went out, I paid for it, paid the sub. There's no handouts here. I'm just trading it straight up, just to do it. And I'm still doing that 100K challenge on the side. It's up. People, you know, it's kind of funny because I think there was like one troll on Twitter that said something like, where's the 10K account? Did you blow that up? Blah, blah, blah. And I go, oh crap, I've been forgetting to post it. And I showed the picture and it's like 25 grand. And I'm like, oh shit. I even forget to post my wins sometimes. I'm like, nope, there it is. It's still there. And they go, oh. You're very close to formulation to clone you. Nom Nom is making another mat. No, hey, guess what? One of the clients is making a clone of me, babe. Now you got 2 mats to deal with. You don't like that. So today, we got Russell pushing lower DD band. Irrational rules. That DD band tap doesn't really hold any merits when you have irrational markets. So you'd expect to touch the upper band before the lower band because DD is 0.98. But that rule only applies when markets are rational. So irrational market, flag out the door, red lights. It's not a rule we use. So everybody here, y'all understand that, right? Throw me a big fat yes in chat if y'all know that rule. You don't use that go to the upper band rule unless markets are rational. Right? So clearly, when I got that spike on bad news, I'm like, I'm out. Those jolts came in terrible, terrible, right? Now the market may support here. But irrational markets just mean you don't rationalize anything. You guys, what a cool day today. Keep an eye on Russell today. Russell or DD band. This is a support if there ever was one. If we lose DD band, clearly, you know, all hell breaks loose. But if there is a support today, it's here and nowhere else. So this on Russell is gonna be very key to watch, right? We all know that we have some pivot there. Be careful. I was mentioning on the spaces this morning that, you know, financials are weak. That early warning sign that the Russell was collapsing. It's about a lot of weakness in regional banks today. There's a lot of so breaking through hedge and breaking through monthly on the financials today, just kind of meh. Did you say Matt? Sorry. Technically speaking, it is. When markets are rational, I love to take longs at the bottom of the bull zone when DD's positive. It's one of the straightest rules we have. It's like textbook, right? But here, when Russell or any other index or any other hedge pressure is broken in any of the indices, I always take alert. I always trade really small, even if I do, because I want markets to not have any unusual behavior. Hedge pressure breaks cause margin calls, cause squeezes that go against all the pressure of the market. I said the pressure of that goes against the structure of the market. So when we see it looking like that, I tend to be a little risk off. While I do believe that the market will likely support here, but I don't think it's going to reverse. I think it's going to fight, push lower lows for the rest of the day, which is great because I'd like to see a red candle in the middle of the short squeeze. Because if we do close red today, tomorrow could be a green day that breaks today's highs. The squeeze is so powerful. There are so many people waiting, or I'm sure Ashton, if he would, I don't know if he's still here, but he would agree. The squeeze is so powerful right now. There are people that can't wait for a red day to just load up on at the end of the day. You'll start to see if the market pushes lower and closes red, I wouldn't be surprised tomorrow was a green day that passed today's highs, because there are that many people short trying to get out, getting out of the way this month. So we'll see. But I'm on the sidelines now. If I don't get my good trade within the first couple hours of the day, and the market just becomes less predictable, irrational signals aren't going to touch it anymore. So I took some profit. My first trade I did, call it a day. So I'm going to sit out. Oh, guys, everybody, go to Discord. Go to Discord right now. Because we're going to do something really cool. Rocket Scooter. The forefront of technology. You know, everybody remember technical analysis? Yeah, it was invented like in the 60s. Invented in the 60s. You know, that worked for never. People sold books. Gurus back then for the internet would sell you books on trading. You look at charts. You know, it looked great in a newspaper, I guess. Then that, you know, computers came along and things got a little more modern. You know, modern technology started looking at options flow and unusual order flow and things like that became hot in the last couple of years, which they're on the right track. Options predict the future. They tell you exactly where someone wants to be long or short at a point in time in the future and where they want to long and short at. Isn't that crazy? Well, we're a step ahead of all of that, because we don't just show you the unusual activity, we predict it before it happens. We'll show you the levels where unusual activity comes in. We've one-upped the one-up. Check us out. $35 a month for the entire platform and all the data feeds and all the experience. We start today. We start all over with the courses. Come to the program. We'd love to have you. We'll see y'all later.